My name is Chloe Gu, investment analyst at CCR Wealth Management. Today, I'm going to touch on some of the regulative news out of China and our CCR Wealth Management's outlook on the future of investing in China. First of all, as many of our clients are aware, CCR Wealth Management initiated a position in Asia emerging market about a year and a half ago. That was right before the world was rocked by the pandemic that originated in China. This was our first foray back into the emerging markets in our model portfolios in several years. And of course, this position has and continues to have a significant presence in China because we see the long-term economic fundamentals of China as being little changed, either by the pandemic or the regulation we've digested more recently. So understanding the fundamentals of China's economic growth and growth potential is quite important. China GDP has doubled over the past decade, becoming the second largest economy in the world. And it's worth mentioning that China was the only major global economy that grew in 2020. And China also played a vital role in global supply chains, from manufacturing parts to the final product assembly. To expand its already dominant role in the global supply chain, China has invested substantially in artificial intelligence and its telecommunication infrastructure. So today, China is the biggest technological powerhouse of innovation outside of the US. Why we are talking a lot about China's GDP growth is naturally slowing, say from 10% 10 years ago to 6% before the pandemic. The contribution of the Chinese consumer to GDP continues to increase, and this trend is unlikely to change. This is where we feel the investors should be more focused. And here we have a chart showing the projected global middle class population by regions. And Asia's consumer market is expected to be larger than the North America and the Europe combined by 2030, according to the World Data Lab. China's middle class will likely to reach over 1.2 billion by 2030. And in terms of the GDP per capita, China's growth going forward is also expected to further close the gap with the West. China's GDP per capita is now at 10,000 US dollar, and US is currently over 60,000. We see the consumer in the West contribute about 2/3 of GDP, while in China, consumer accounts for about 38% of GDP. CCR Wealth Management believes these facts are unlikely to change, and tremendous growth opportunities exist in China as China continues to close the economic gaps with the West. But we also believe that the dynamic of investing in China has changed. For those investors who still focused on energy, manufacturing, and construction rather than technology, healthcare, and consumer consumption will likely miss a boat.